The big day on Wall Street yesterday. The markets will open today at a record high. The Dow rallied on Wednesday to close above 37,000 for the first time ever as the Fed forecasts interest rate cuts in the new year. A few of them, actually. Joining me now is NewsNation contributor and New York Post reporter Lydia Moynihan. Okay, Lydia, break this down for us? Put this into layman's terms. What contributed to the big day on Wall Street and where the market opens up now?
I think everyone on Wall Street was breathing a massive sigh of relief that this long national nightmare of ultra high interest rates appears to be coming to an end. And for the first time yesterday, we heard Federal Reserve Chair Jerome Powell saying that inflation has eased. And while it might not sound like much to somebody who's not following all of the machinations of this, it was the first time he's really said anything positive about the state of inflation in this country. And as you mentioned in the intro, he forecast 3 rate cut hikes next year. Even the most optimistic expectations had been that maybe we would see 2 rate hikes. So this was far better, really, than anyone had predicted. And of course, that means for anyone who's a borrower, if you have a mortgage or a car loan, you can expect to see your interest rates coming down maybe a percentage point or more in the next year. And so I think the conclusion for a lot of people is that we may be able to achieve this soft landing where we've reined in inflation. It's about 3.1%, far closer to the 2% goal than the 9% we saw last year. And at the same time, we're seeing those interest rates ease.
Yeah, I know a lot of experts said the Fed gave us an early holiday gift this year, but I also saw a lot of people saying, you know, and questioning, is the Fed cutting rates as a result of inflation actually normalizing, or are they doing this fearing an impending recession and wanting us to go out and spend? Is that a legitimate concern, do you think?
Well, that's always the question. And it's, important to be aware, of course, all of the data that we're seeing right now, it's all backwards looking. And at the same time, if you're looking at all the events, we're seeing lots of layoffs continuing. So there is some speculation that maybe as the Federal Reserve looks in its glass ball, looks at the data, they are seeing more slowing more quickly than they would have expected. And as a result, they're saying, okay, time to ease things down, time to make sure that we don't go into recession. But it does look like this problem of inflation has certainly eased from where it was last year at this time.
Okay, we will see where this goes from here. Lydia Moynihan, thanks so much. Appreciate it.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.